Good morning, everyone. I'm Helen Hargreaves, and I'd like to welcome you to this month's payroll update from MBKB. It's my voice that you're going to hear for this update, but Rose Howell is also here, and she'll be answering any questions that you have through the chat box, or if there's any at the end of the session that we haven't been able to answer, then we'll either deal with them over the airwaves, or potentially we will email you with the answer, the question and the answers within the next day or so. So if you do have any questions, please use that chat box and fire them away, and Rose will get them covered for you. Now, I just need to address the elephant in the room, which is perhaps a wrong phrase for what I'm about to say. But for obvious reasons, Rose and I are not in the same room. We're not even in the same country, which makes delivering a webinar a tad more tricky than if we were both sitting together. So please bear with us if things aren't quite as slick as you would expect when we're covering your questions and things at the end. I thank you now for your forbearance. So here's the agenda. First of all, I'm going to give you an introduction to Payroll, and then we'll look at an update to the CJRS. And what's coming next, so CJRS 2 and flexible furlough. We're just going to have a look at how COVID-19 is interacting with SSP at the moment, and that tricky question of redundancy while someone's being furloughed. And then we'll just touch on direct earnings attachments, and then what other news is going on in the payroll world. And then we'll come back to those questions at the very end. So before we start on the legislative update, I thought it would make sense if I talked you through the changes we've introduced here at MBKB to support payroll colleagues. I joined MBKB at the beginning of July as the head of payroll policy, and over the coming months we're going to be working to expand the support we offer to our payroll apprentices, learners and their employers moving forward. If lockdown and the furlough scheme has taught the country anything over the last few months, it's that payroll is the beating heart of business, keeping workers paid whilst the world is in turmoil. And whilst we all know that the world of payroll is constantly changing, over the last few months, to put it like that, it's been an understatement. Things have been changing by the hour, so it's vitally important that we at MBKB keep up to date so that we can keep you up to date. So what has MBKB done? Well, we have a dedicated payroll team with me, Helen Hargreaves, heading up the payroll policy side. And you'll be relieved to hear that Rose Howell is still here as the payroll business development manager, delivering payroll training as well as being a payroll tutor. And we also have 6 other dedicated payroll tutors. So that's Emma Millward, Molly Dodwell, Claire Vanspal, Colin Lum, Laura Chambers, and we should have that 6 in place at the beginning of October. We now have a new website dedicated to payroll, and that's www.payroll.com. This gives details of forthcoming events, the different types of training available, as well as links to supporting guidance and resources. We also issue monthly newsletters. We've been issuing newsletters since February, but this month was the first issued under the payroll branding. I hope you've all received it and that you found it useful. If you haven't received it, or if you've got suggestions for what you'd like to see in future editions, please email me. My email address is helen@mbkbgroup.com. And the same thing applies for our monthly updates, these webinars that we're doing for you. Today's update is going to focus primarily on furlough and the CJRS, although I have included a few of the bits of news at the end because, surprising as it might seem sometimes, there is life outside furlough. But next month's update is going to focus on termination payments and redundancy, as we know that despite everyone's best efforts, there are going to be more and more redundancies and terminations. So Rose is going to give you a session focusing specifically on the things you need to bear in mind. We're also going to be delivering a session for workers on how to cope with redundancy. So if you think either of these will be useful for you or your workers, please go to the Payroll website for more information and to book onto the sessions. Over the next few months, we'll be developing a Payroll app along with membership packages, and more information is going to come out about that next month. In the meantime, why don't you check out the website where you will already find links and resources for support and guidance. But again, this is going to be developing as time goes on. In our last update, we gave you details of the CJRS scheme, what furlough was and how it might affect you and your payroll team. I'm just going to give you a quick recap because today, 31st of July, is the last day you can submit a claim for a grant under the original CJRS. And you're going to get sick of me saying that today, but it is important that the 31st of July deadline is met. So, as a recap, CJRS up to the 30th of June. The government pays up to 8% of employee wages plus the employer national insurance and pension contributions. 8% of wages is capped at a maximum of £2,500. The employer can choose to top up to 100%, but that's not mandated. And of course, if they do that, then the employer has to stand that cost, the difference between the 80 and the 100%. A minimum furlough has to last at least 3 weeks. So up until the 30th of June, the minimum length of time an employee could be furloughed for was 3 weeks. And therefore the last date which an employee could be furloughed for the first time was the 10th of June 2020. Furlough leave can be rotated and employees can be furloughed multiple times, provided that prior to the end of June, this was always for a minimum of 3 weeks. Where a previously furloughed employee started a new furlough period before the 1st of July, this must be for a minimum of 3 consecutive weeks. And employees have to be on the have had been on the RTI submission by the 19th of March 2020. Several employees slipped through the net for this. If they were hired after the pay date in February, they must have already been included on an FPS to be furloughed, and it's been one of the most contentious rules. It's been done to prevent or at least to minimise the opportunity for fraud, but it has seemed very unfair for those workers who swapped jobs just as lockdown hit. Employees can be rehired to be furloughed, and an employer has been able to rehire someone who has already left, either due to resignation or to redundancy. Those employees who left after the 28th of February, having resigned for a new role that fell through due to coronavirus, can be rehired. And that includes both those who didn't start the new job and those who did, but now face redundancy because as new starters, they can't be furloughed. And just need to be clear though, that where the unemployment isn't caused by coronavirus, for example, someone who voluntarily left a job to take a few months off to travel the world, those roles don't allow them to be rehired in order to be furloughed. Employees who were made redundant or stopped working for the employer after the 28th of February or after the 19th of March, because the rules got moved on a little bit, can be rehired and put on furlough provided they were on the RTI submission on or before the 28th of February or the 19th of March, respectively. The scheme doesn't address whether the rehire needs to be on the same terms and retrospectively reinstated from the date their employment ended. It also doesn't address that status of any redundancy payment that's also been made to them. So I would suggest that you take some legal advice about that. It seems open to the employer to ensure that there's a break in statutory continuity of employment and possibly offer a shorter notice period. No work allowed whilst furloughed up to the 30th of June has also caused issues, particularly for those workers who hold 2 jobs. If the jobs are with 2 different employers, then there's been no problem because they can be furloughed from one and still be working for the other. But there has been more confusion with workers who've got two contracts with the same employer. It's often local authority employees. But the rules are quite clear. If you are furloughed, you cannot undertake any work for that employer, even if you've got two different contracts. Interaction with national minimum wage has also caused some confusion. But just bring it back to what national minimum wage and national living wage are all about. National minimum wage and national living wage specify the minimum amount that must be paid per hour whilst at work. Under furlough, as the employee is not working, and they can't because they can't work while they're furloughed, then the national minimum wage rules don't apply. Any changes should be documented. So ACAS has got template letters for employers and employees explaining the terms of a furlough agreement, and you should keep the record of the agreement for 5 years. Remember, employment rights are maintained during furlough, so they would keep the same employment rights as non-furloughed employees, including in respect of unfair dismissal, discrimination, redundancy payments and statutory payments such as statutory sick pay and maternity rights and other parental rights. One question that does keep popping up is how should an employer calculate statutory maternity pay for an employee who's on furlough leave or who's been in receipt of sick pay during that SMP calculation period? The calculation of an employee's statutory maternity pay entitlement is usually based on their average weekly earnings during that calculation period, the 8 weeks leading up to the 14th week before their expected week of childbirth. However, the government has amended the rules on the calculation of SMP for employees who've been furloughed under the CJRS. For periods of maternity leave beginning on or after the 25th of April 2020, if an employee was furloughed and on reduced wages during any part of that calculation period, their SMP should be calculated using the pay they would have earned had they not been furloughed. That legislation providing for statutory pay to be based on usual rather than reduced earnings also applies to the calculation of statutory paternity, adoption, shared parental and parental bereavement pay and maternity allowance. But when during the calculation period an employee was in receipt of SSP, because they were either self-isolating or off sick, their SMP will be calculated using their actual average pay during the period, including any weeks when they were in receipt of SSP. The amount of higher rate SMP due will be reduced accordingly, or they might not even be entitled to SMP at all if the reduced pay is less than the lower earnings limit for national insurance. The same would apply for employees on reduced hours because of the coronavirus crisis. So the legislation providing for statutory family-related pay to be based on that usual earnings only applies to furloughed employees where a claim has been made under the CJRS scheme. Chancellor Rishi Sunak announced that the government was going to support employers by paying 80% of employee wages through the CJRS on the 18th of March. On the 26th of March, it had published the first round of guidance and the portal itself opened on the 20th of April. And within 2 hours, it had received 185,000 claims with a total value of £1.5 billion for 1.3 million employees. And do you know what? It didn't fall over. This is one of those very rare beasts, a new HMRC system that actually worked. But you need to know why it worked. It worked because it was kept very simple. It went from announcement to launch in just over a month, which is phenomenal. But the rules were very specific. You had to do this, this, and this. So we know that there were so many circumstances that didn't really fit or questions that weren't really answered because they didn't have time to start adding in different scenarios. And if it's this, do that, or something else, do the other. So whilst for the majority of employers who've used it, it's been a very successful lifeline, there's no doubt that it had its limitations. But as lockdown restrictions are slowly being lifted, this coincides with the extension of the CJRS from the 1st of July to allow more flexibility, which of course brings even more questions, and have no doubt about it, there will now be more chances for things to go wrong. I mentioned earlier that today, the 31st of July, is the last day that you can claim for your grant for wages under the original CJRS, because new rules came in from the 1st of July. So let's look at what's changed. Claims for furlough periods between the 1st of March and the 30th of June have to be submitted by the 31st of July. Did I mention that's today? So that's the deadline for claiming back the grant for any workers who've been furloughed between the 1st of March and the 30th of June. Flexible furlough periods are going to be introduced from July onwards. So as lockdown restrictions ease, employers might want to start bringing people back to work, but they might not have the capacity to bring everyone back full time. Under the original CJRS, furlough periods had to be at least 3 weeks, and employees weren't allowed to undertake any work for the employer during that time. We've covered that already. But this changed from the 1st of July, and employers can have workers in work when they need them and furlough them when they don't. This might mean that workers work 2 or 3 days a week, being furloughed for the other days of the week. It might mean that employers can alternate furlough and work between the employees, giving each a turn at working and being furloughed. The tricky part is going to be working out what proportion of the national insurance and pension contributions can be claimed back, but we'll look at that later on. But just because employers can introduce flexibility into the furlough period doesn't mean to say they have to. There are some industries, such as theatre, for example, where there's not yet prospect of returning to work in any capacity. So if employers need or want to keep workers fully furloughed, they can. Although the amount of the grant that they can claim back will progressively reduce between now and October. But again, we'll talk about that later. But remember, if you flexibly furlough employees, you'll need to agree this with the employee or reach collective agreement with the trade union. And you must keep a new written agreement that confirms the new furlough arrangement. Employers are going to need to make sure that the agreement is consistent with employment equality and discrimination laws, keep a written record of the agreement for 5 years, keep records of how many hours the employees work and the number of hours they've been furloughed, i.e. that they've not been working. You do not need to place all your employees on furlough, and you can continue to fully furlough employees if you want. Employees can't undertake any work for you during the time that you record them as being on furlough. So that bit's crucially important. Something new, claims can't overlap calendar months. So under the original CJRS, when workers had to be furloughed for a minimum of 3 weeks, you'd got a reasonable amount of freedom for how long the period was that you were claiming for. But now, if someone has been furloughed for a period which spans 2 months, so July and August, say, then you must submit a claim for July and a separate claim for August. All the claims must be restricted to a calendar month. Your claim periods can't be shorter than a week, although the actual period of furlough can, of course, be less than that. It can be for any length of time, in fact. And moving on from the 1st of July, any employee that is furloughed from the 1st of July onwards must have already been furloughed under the previous CJRS scheme, except those returning from a period of statutory parental leave, military reservists, or 2P transfers. From the 1st of July, the number of employees that employers can claim for in any single claim period can't exceed the maximum number of employees that the employer claimed for under any claims ending by the 30th of June. So, for example, if an employer previously submitted 3 claims between the 1st of March and the 30th of June, in which the total number of employees furloughed was 20, then 30, and then 50 employees respectively. The maximum number of employees that the employer can furlough in any single claim from the 1st of July onwards will be 50. Except those returning from either those returning from statutory parental leave or military reservists that have come back, or any 2P transfers, and they can be added to the maximum number. So if the previous maximum amount was 50 and 2 people come back from maternity, then you could have 52 people furloughed from the 1st of July. Just as employers got to grips with the intricacies of making a claim for wages through the CJRS, on the 1st of July we entered the phase 2 of the CJRS, which brings with it a new set of rules. So here's what you need to know. I think I might have mentioned it once or twice, but 31st of July is the latest that you can submit claims for periods ending on or before 30th of June. The coronavirus job retention scheme is going to close on the 31st of October 2020. From the 1st of July, employers can bring furloughed employees back to work for any amount of time and any shift pattern while still being able to claim the CJRS grant for the hours that they haven't worked. That's commonly known as the flexible furlough scheme. While still required to pay furloughed employees at least 80% of the wages, capped at £2,500, the amount that employers can claim back will be reduced each month as shown in this table. So in June, 80% of wages, capped at £2,500, plus the employer national insurance and pension contributions, you could claim all that back. So that was quite a straightforward calculation. In July, it's as it was in June, except that what you're doing is furloughing and claiming back for the hours that the employee was on furlough. The employer must pay the employee for any hours that they've actually worked. In August, 8% of wages capped at £2,500 for the hours an employee is on furlough, but the employers must pay the employer national insurance and pension contributions for the hours that the employee is on furlough. In September, it drops now to 70% of wages that can be claimed back from the CJRS. So that caps out at £2,187.50. For the hours that the employee is on furlough, employers must pay employer national insurance and pension contributions as before, but then they must also top up the employee's wages to ensure that they still receive 80% of the wages up to that cap of £2,500 for the hours that are furloughed. And in October, that drops to 60%. So you can claim back from the CJRS up to 60% of wages, up to a cap of £1,875 for the hours that the employer is on furlough, but employers must pay the employer national insurance and pension contributions and top up the employee wages to ensure that they still receive 80% of their wages up to that cap of £2,500. So the amount that the employer has to contribute keeps increasing. So making a claim, employers need to be totally certain of the exact number of hours that an employee has worked or will work in the claim period before submitting the claim. Because if the employee actually works more hours than you expected, then you'll have claimed too much from the CJRS and some of it will need to be repaid. Your claim period is made up of the days you are claiming a grant for. The start of the first claim period is the date your first employee was furloughed. There's no maximum length for claim periods that ended on or before the 30th of June, but claims for any period starting before the 1st of July must end on or before the 30th of June. And that's the case even where an employee furloughed in June continues to be furloughed full-time in July. Separate claims will need to be submitted to cover the days in June and the days in July that you're claiming for, even if the employees are furloughed continuously. And that means that your claim periods may well differ from the pay periods that you actually use. And as I said earlier, claims for the period ending on or before the 30th of June must be made by the 31st of July, i.e. today. Claim periods starting on or after the 1st of July must start and end within the same calendar month and must last at least 7 days, unless you're claiming for the first few days or the last few days in a month. You can only claim for a period of fewer than 7 days if the period you're claiming for includes either the first or last day of the calendar month and you've already claimed for the period ending immediately before it. You should match your claim period to the dates you process your payroll if you can, because you can only make one claim for any period. So you must include all your furloughed or flexibly furloughed employees in one claim, even if you pay them at different times. If you make more than one claim, your subsequent claim can't overlap with any other claim that you make. Where employees have been furloughed or flexibly furloughed continuously or both, the claim periods must follow on from each other with no gaps in between the dates. You can claim before, during or after you process your payroll. You can usually make your claim up to 14 days before your claim period end date, and you don't have to wait until the end of a claim period to make your next claim. Claims for periods after the 30th of June can be made now. They could have been made from the 1st of July onwards. If you're putting more than 100 or more employees on furlough, you can download a template and use that template to help ensure that your claim is processed quickly and successfully. But to fill in the template, you must know your employee's full name, national insurance number, payroll number if they've got one, furlough start date, furlough end date if you know it, and the full amount claimed. If you're flexibly furloughing any of these employees, you'll also need to include the number of usual hours your employee would usually work in the claim period and the number of hours your employee has or will work in the claim period. And you're also going to need to keep a record of the number of furloughed hours your employee has been furloughed in that claim period. Whilst on furlough, employees are still entitled to receive 80% of their wages up to a cap of £2,500 for the time that they're furloughed. Employers can still claim back this full amount from now until the end of August, but in September, as we've talked about already, employers can only claim back up to 70% of wages, and in October, 60% of wages, despite the workers still receiving 80%. But whilst employers can still reclaim the full amount of the furlough payment until the end of August, the same can't be said for the employer national insurance and pension contributions, which the employer is going to have to fund themselves from the 1st of August. Between now and then, employers furloughing their employees flexibly for the month of July are going to experience a whole world of pain trying to work out what the national insurance and pension contributions attributed to the furloughed hours are and how much are attracted by the hours worked, and they must be funded by the employer. So as you might expect, there's a lot of guidance and example calculations on gov.uk. So I've just got some examples here to talk through. Working out what you can claim for claims between the 1st of July and the 31st of July. We've already said employees can return to work part-time and be furloughed for the rest of the usual hours. So you should calculate the employer national insurance contributions that you need to pay in the normal way. But you can only claim back from the CJRS the national insurance costs that are attributable to those furloughed hours. So for those claim periods, you can claim a grant towards the national insurance costs, but the amount you can claim is calculated differently than for the periods before the 1st of July. You should do that calculation separately for each pay period that falls into your claim period. You can't claim, it's sort of a bit obvious really, you can't claim a higher amount than the employer national insurance contributions that are due. So before you calculate the amount you can claim, you first need to adjust the amount of the relevant secondary national insurance contributions threshold. So to adjust the amount of the secondary national insurance threshold, you start with the threshold that corresponds to that pay period. So in here, we've got the example here. Y Limited makes a claim for an employee who's paid weekly. The claim period is 6th of July to the 20th of July, to the 12th of July, which aligns with the employee's pay period. Y Limited is claiming £170 towards its employees' wages because the amount of the wages it can claim back, that calculation is still the same. The employee is furloughed for 10 of their usual 30 hours during that claim period. So the first thing you do, you start with the adjusted secondary national insurance threshold. So you start with £169 because that's the relevant secondary national insurance threshold. You divide it by 7, which is the number of days in the pay period, and then you times it by 7, which is the number of days in the furlough claim. Dividing it by 30, which is the employee's usual hours in the claim period, and then times it by the number of hours the employee is furloughed. So you're claiming back 10 of the 30 hours that the employee would usually work. And you're claiming back 10 because that's how many the employee has been furloughed for. So we've got the calculation there, 169, the threshold, divided by 7, the number of days in the pay period, times it by 7, which is the number of days in the furlough claim, divided by 30, the employee's usual hours, and then times it by 10, how many the employee is furloughed for. And that gives you £56.33. So we know now that the secondary NI threshold, secondary threshold of course being that for the employer, the threshold is now £56.33 for the amount that we want to work out is attributable to the furloughed hours. So next you've got to use that adjusted threshold to calculate the amount of the grant. So start with the amount that you're claiming for the employee's wages, so that was £170. Deduct £56.33, so that's the threshold, that's the employer's threshold that the below which national insurance isn't payable. So we would do that, £170, take off £56.33, gives us £113.67. That's how much we're going to work out the national insurance contributions on. Times it by 13.8% because that's the employer's rate, and that gives us 15.686. So we're claiming £15.69 towards employer national insurance costs. We're going to do something very similar for calculating the employer pension contributions, because the government will cover the pension contributions for previously the government it covered the pension and the national insurance contributions, but now the employer has got to pay for them themselves. So you need to work out what the contributions are for the furloughed hours. The government will cover those, but you have to pay the pension contributions for the amount of hours that the employee has been working. So what we have to do is work out the lower level of qualifying earnings, so the LLQE. You start with £120 because that is the relevant LLQE for weekly pay. You divide it by 7, that's the number of days in the pay period, times by 7, the number of days in the furlough claim, divide it by 30, see it's the same principle we went through before, divide by 30 the employee's usual hours in the claim period, and then times it by 10, the number of hours that the employee is furloughed in that claim period. So working through that calculation, the adjusted threshold is £40. So now what we have to work out is calculate the amount of the grant. So how much can you claim back from the government to cover the pension contributions for the hours that the worker was furloughed? So we're starting with £170, that's the amount of the gross pay grant. Deduct £40, so that was the threshold, the lower level of qualifying earnings. Times it by 3%, because that's the rate that the employer contributes, and that gives us £3.90. So you can claim back through the CGRS £3.90 towards the employer pension contributions. If you want to delete a claim in the online service, you must do that within 72 hours. If you've made an error in a claim, which means that you've received too much, you must pay this back to HMRC. And you can either do that by adjusting your next online claim by reducing it and keeping records of the adjustment for 6 years, or you can contact HMRC to pay that money back, but only do that if you're not intending submitting another online claim. If you've overclaimed a grant and you've not repaid it, you must notify HMRC by the latest of 90 days after you receive the grant that you weren't entitled to, or 90 days after you received a grant that you weren't entitled to keep, because your circumstances have changed since you made the claim, or the 20th of October 2020. 90 days from the date of the claim after the 22nd of July, which is when this guidance came out, that's where that 20th of October comes from, because that's 90 days after the 22nd of July. If you don't do that, you might have to pay a penalty, and if you do repay the grant, this will prevent any potential tax liability in respect of the overpayment of CGRS. If you've not claimed an error, if you've not claimed enough, then you need to contact HMRC to amend your claim. And HMRC might conduct checks as you're increasing the amount of that claim. After today, you can't amend any claim by adding an employee to a claim for a period that was up to that 30th of June. But if you need to amend any claim for any other reason, then that means that you haven't claimed enough, then you can still make amendments after the 31st of July. So, news that we've just had in the last day or so is that furlough fraud reporting window has been extended up to 90 days. So it was 30 days, but now there's 3 months in which to report furlough fraud. And that extension also covers claims under the Self-Employed Income Support Scheme, the Coronavirus Sick Pay Rebate Scheme, and other COVID-19 grant schemes. And remember, HMRC has the potential to claw back 100% of any amount that's been fraudulently claimed. So let's have a look at how the SSP rules have changed just in response to COVID-19. You can pay SSP if an employee is sick for at least 4 days and any of the following apply. So they have coronavirus symptoms, or they are self-isolating because someone they live with has symptoms, but then you would need to get a note from NHS 111. They are self-isolating because they've been notified by the NHS or public health authorities, and again, you would need an isolation note from NHS 111. They have a letter from the NHS or a GP telling them to stay at home for at least 12 weeks. That's called shielding. It's different to self-isolating. Shielding, they've not necessarily come into contact with anyone who has the coronavirus, but they are staying at home to make sure that they don't come into contact with anyone who has it. And so employees, one thing that you need to remember, employees don't have to give you a doctor's fit note for you to make a claim, but you can ask them to give you either that isolation note from NHS 111 if they're self-isolating and can't work because of coronavirus, or they have the letter from the NHS or GP telling them to shield for at least 12 weeks because they're at high risk of severe illness from coronavirus. Key point now, if someone is absent because they still want social distance, but none of the above apply, so none of these bullets apply, then you can't pay SSP because they've not been advised to self-isolate by the NHS or public health authorities. They've just decided for themselves. Now, the last bullet is something that is close to my heart. From the 8th of June 2020, the majority of people entering or returning to the UK will be required to quarantine for 14 days. If an employee is unable to work during that period, they won't qualify for SSP unless they also meet that above criteria. Now, one that has really had an effect is the government's recent decision to impose 14-day quarantine on travellers returning to the UK from Spain, and that might in some places be called self-isolation, but it's quite separate from any extra time that it might take workers to get home, which is the situation that I find myself in, as I'm currently in Spain with my flight home being cancelled. But anyone, when they do get home, will not be entitled to SSP. If workers can work from home, they can and be paid as normal, or an employer can ask them to take extra holiday or unpaid leave. Or if they were on furlough before they went away, then you could put them back on furlough, but only in that circumstance. You can't suddenly furlough them if they've not been furloughed before. And those workers need to know that there's a fine of £1,000 that can be imposed for breaking quarantine. SSP, just as a recap, is only payable when an employee has coronavirus symptoms, a high temperature, loss of taste, smell, new cough. Someone in the household has coronavirus, or they've been told to shield by the NHS, or they've been told to self-isolate by a doctor or NHS 111, or by the government's test and trace service. So something that is different for SSP only for COVID-19 related illnesses, the 3 waiting days that we would normally have for SSP do not need to be observed. So it's payable from the first qualifying day. But note that the legislation for paying SSP in different circumstances came in at different times. So the dates must be observed if you're starting to look back to see if someone might be eligible. So for those people who are eligible for COVID-19 related SSP only, these are the rules that apply. So they can get it from day 1, from the 13th of March 2020, if the employee has coronavirus symptoms or is self-isolating because someone they live with has symptoms. For those employees who are getting SSP because they're shielding, that day 1 element only kicked in on the 16th of April. So if they were shielding before that, they still have to have 3 waiting days. And for those who've been told to self-isolate by NHS or Public Health England or Track and Trace, that came in from the 28th of May. You can reclaim 2 weeks SSP. Now again, this is only COVID-19 related SSP. All the other types of SSP you can't reclaim, you can't get that back, but you can for any SSP relating to COVID-19. So you can reclaim up to 2 weeks SSP if all the following applies. Your employee was off work because they had coronavirus or was self-isolating or shielding. The payroll scheme started on or before the 28th of February this year, and you had fewer than 250 employees on the 28th of February this year. To claim it back, there's an online portal, and you can reclaim up to £95.85 a week for each employee. If your employee is sick for any other reason, you could still pay them SSP, but they will still have the waiting days, and you cannot reclaim the amount through this rebate portal. You can make more than one claim per employee, but you can't claim for more than 2 weeks in total. So some people might be quite unlucky and keep getting told to self-isolate because they keep coming into contact with people who've had the disease. You can still pay them SSP, but you can only reclaim up to a maximum of 2 weeks, and then after that, I'm afraid that the employer has to stand it. Recovery of SSP is considered to be state aid, so your claim should not take you above the state aid limits for the EU Commission temporary framework. So that's when, combined with any other aid that you've received, the maximum level that you can receive is up to €800,000, but there are lower maximums for agriculture, which is €100,000, and aquaculture and fisheries, which is €120,000. So you need to check if you're intending to claim back under this rebate. You just need to check with finance department or maybe the finance director or something, just to see if you get state aid and whether you're anywhere near that cap, because if you are, you can't claim the SSP back if it's going to take you over that limit. Then you'll need to print or save your state aid declaration and keep it until the 31st of December 2024. HMRC has updated 2 of its pages on this guidance relating to the coronavirus job retention scheme. So it's changed. Check which employees you can put on furlough to use the CGRS, and check if your employer can use the CGRS. And they've changed those to provide further clarity around notice periods. So essentially, the employer can still make someone redundant while they're on furlough, and the employers can continue to claim CGRS whilst that notice period is being served. But the CGRS can't be used to pay either payments in lieu of notice or the redundancy payments themselves. And talking of redundancy periods, the guidance is clear that employees' rights and other employment rights can't be affected by being furloughed. So any employee who's made redundant whilst on furlough will be entitled to statutory redundancy payment if they've got 2 years continuous employment, as well as any contractual entitlement. And a new law which just came into effect today make sure that furloughed workers, when they're made redundant, their payment is calculated on their pre-furlough salary. So it's paid on their usual pay, not on the reduced pay that they've been receiving under furlough. Now, the calculation of any contractual redundancy entitlement is going to depend on the contractual terms governing that payment. So that's more contractual based, but the statutory redundancy payment has to be calculated on their usual amount of pay. Due to the impact that coronavirus has had on almost every aspect of our daily lives, the Department of Work and Pensions has announced that it will be writing to employers to instruct them to temporarily stop benefit debt repayments, and that no DEA deductions will be taken from employees' pay in April, May or June. What the DWP has said is essentially, don't take any DEA payments now that have been issued by the DWP until they write to you and tell you to start again. Now, the reason why I'm just being very careful when I say that is because it's not just DWP who can issue direct earnings attachments. Local authorities can as well. So if you do have a DEA for one of your workers, try and check out and see, did it come from the DWP or did it come from the local authority? Because DWP, you just stop immediately, just stop and don't start again until DWP writes to you again. If it's one that's come from the local authority, then you need to check it out and see what the status is with that one. I would think it's highly likely that they will want you to stop, but just double check back with that authority that granted it. For those of you who've been trying to calculate, process and reclaim furlough payments, it must feel like there's no life outside CHRS. But for those of you who don't have to grapple with furlough on the CHRS, I imagine many of you are breathing a huge sigh of relief. But whilst I'm just going to give you a quick preview into some of the other things coming up in the near future, I'm also mindful that for some of you, there might be a difficult few months ahead. So I'm going to be giving you a heads up about next month's payroll update as well. A new statutory payment that came in from the 6th of April 2020. An employee might be eligible for parental bereavement leave and statutory parental bereavement pay if they or their partner either has a child who died under 18 years of age or had a stillbirth after 24 weeks of pregnancy. But importantly, the death or the stillbirth must have happened on or after the 6th of April. So if we look at the bereavement leave, an employee can take 2 weeks leave from the first day of their employment. So it's day one, right? For each child who has died or was stillborn, they can choose to either take 2 weeks together or 2 separate weeks of leave or only 1 week of leave. The leave itself can start on or after the date of the death or the stillbirth, but it must finish within 56 weeks of the date or the death of the stillbirth. And that's important because of its interaction with other types of statutory leave. So if the employee was on another type of statutory leave when the death or stillbirth happened, so say someone was on maternity leave or paternity leave, parental bereavement leave must start after that other leave has ended. So that includes even if that statutory leave is for a different child. If an employee's parental bereavement leave is interrupted by the start of another type of statutory leave, then they can take their remaining entitlement to parental bereavement leave after that other leave has ended. So that's why they've got 56 weeks in which they can take it to allow all the other statutory leaves that they're entitled to be taken, and then parental bereavement leave can be added on at the end. Parental bereavement leave can be taken between blocks of shared parental leave, which have already been booked. So, you know, for that, they can have a block of leave and then they can come back to work, and then can have another block of shared parental leave. So parental bereavement leave can be taken in between different blocks of shared parental leave when the child's died, even again, if that shared parental leave is for another child. Looking now at the pay, statutory parental bereavement pay for an eligible employee, so they've got certain eligibility criteria that they need to fulfil, is either £151.20 a week or 90% of their average weekly earnings, whichever is the lowest. Tax and national insurance still need to be deducted. The eligibility criteria: to be eligible, employee must meet the criteria both as a parent, so including if they've got day-to-day responsibility for that child, and as an employee. There's various criteria for being a parent, including being the child's or baby's parent, either biologically, adoptive, or parent of a child born to a surrogate, or being the partner of a child or baby's parent. So if you do get a request, just check on gov.uk, because the government is trying to be as open as it can, recognising that so many different people may well actually be covered by this. As an employee, they must have been continuously employed by you for at least 26 weeks up to the end of the relevant week. So that relevant week is the week immediately before the week of death or stillbirth. And they must also remain employed by you up to the day the child dies or is stillborn, and earn on average £120 a week. Notice periods are again something that the government's wanting to be very flexible with, because they depend on when the employee wants to take the leave, and understandably so. So the 56-week period that the leave can be taken has been split up into 2 different periods. So from the date of the death or the stillbirth up to 8 weeks after that is one period, and then from 9 weeks after to 56 weeks after the date of the stillbirth. So the 0 to 8 weeks after the child's death or stillbirth, you would still expect some notice from the employee to say, well, I'm not coming in today because, but they would only need to tell you just before they would normally start work on the first day of that period that they want to take off work. So as long as they tell you before you're expecting to see them, then that's all right. 9 to 56 weeks after that child's death or stillbirth, so they've had time to get their heads around it a little bit and time to give you a bit more notice. So they must give you at least 1 week's notice before the start of the week or weeks that they want to take off. But again, remember, they've got 56 weeks. So that allows employees not just to take time off at the time of the bereavement, but perhaps if the anniversary is coming up, so that they might want to take a bit of time off then as well. And this allows them to do that. The way that employees should give you notice, what they should tell you is the date of the child's death or stillbirth, when they want the parental bereavement leave to begin, how much they're taking, either 1 or 2 weeks. And they can tell you informally, so they might call you, they might text you, they might email you. All those are absolutely fine. What you can't ask for is the notice for leave to be in writing. So they can't give you a call and you say, oh, well, send me a letter or send me an email. You can't do that. You can't ask for notice to cancel the leave in writing. You can't ask for evidence of entitlement to leave. And what you can't ask either is for details about the employee's relationship to the child or the baby. Now the slide here is titled Class 1A National Insurance and Termination Payments, but it's not just termination payments, although that's the category that's going to affect most of you. But to give it its full title, actually the legislation is the National Insurance Contributions, Terminations and Sporting Testimonials Act 2019, and that took effect from this April. Class 1A national insurance contributions are payable on most benefits provided to employees, but from April, the Class 1A NIC are also payable on non-contractual termination payments that exceed the £30,000 threshold and are not already subject to Class 1 national insurance contributions. Just to give you the other bit of the story as well, from April as well, Class 1A national insurance contributions are payable on non-contractual, non-customary testimonial payments being paid to a sportsman by a sporting testimonial committee which exceeds the £100,000 threshold. But the key thing that you need to know is that unlike normal Class 1A national insurance, payments where those payments are due in the July following the end of the tax year, Class 1A NICs for termination payments and sporting testimonials must be reported and paid in real time. If you only have to pay, but you only have to pay Class 1A national insurance contributions on termination awards if you've not already paid Class 1 national insurance contributions on them. So from the 6th of April, we've got a new Class 1A National Insurance liability on non-contractual cash or cash equivalent taxable termination awards over a £30,000 threshold. And that's to bring closer alignment between income tax and national insurance treatments of termination awards. The new liability is going to be chargeable on the employer. It'll be payable at the same Class 1A percentage as normal, so it's currently 13.8%. But unlike the Class 1A liabilities on benefits in kind, this new liability will not be reportable on a P11D or a P11DB. Instead, these Class 1A liabilities that arise on taxable termination awards will be paid and reported through RTI, and you'll need to include them on the FPS. As the furlough scheme winds down, all the indications are that there will sadly be many more redundancy to come. And mindful of this, next month's payroll update on the 25th of August is going to focus solely on termination payments, and that's going to sit alongside sessions focusing on redundancy for employees. So if you think that this might be something that could well affect you moving forward, visit that Payroll website and book your place. From the 1st of June, the advisory fuel rates are, I'm not going to read those out, you can read those for yourselves. Just know that the advisory fuel rates are reviewed every 3 months, so we will be expecting another one out on the 1st of September. And HMRC has just published detailed guidance about when these fuel rates have been out for years, but how they are calculated. And this new guidance makes it clear that the tax and NI liabilities that are reportable where a rate above the advisory fuel rate is reimbursed to the employee. So if the employer reimburses no more than the advisory fuel rates for that engine size and fuel type of the car, then the employee isn't liable for any tax on national insurance. But if the cost of business travel is higher than the advisory fuel rate, then and employers choose to pay a higher rate to cover the cost of business miles travelled, proof must be provided of the costs to make sure that no fuel benefit charge is going to arise. If it can't be proven, any excess of the advisory fuel rate will be treated as earnings and will be liable to tax and national insurance. So as I've just already mentioned, the next payroll update is on the 25th of August between 10 and 11 o'clock. So visit www.payroll.com to book your place now. I've just been looking at the chat box as we've been going through, and we haven't had any questions raised as we've been going along. So we won't have any questions to cover, but if any do strike, please do email me, helen@mbkbgroup.com. Thank you very much for your time this morning, and look forward to being with you next month. Take care. Bye-bye.